All right. Good morning, everyone. My name is Edgar Martin with Collaborative Networks. Today I have Todd Castle here today and David Montano. We're going to talk a little bit about payroll and one of the reasons why you should outsource your payroll. It's the question I wanted to ask an actual payroll rep, and I have Todd with me here today. But anyways, Todd, if you want to introduce yourself real quick.
Absolutely. Good morning, everyone. My name's Todd Castle. Please excuse the casual attire and the hat, but obviously these are unprecedented times we're dealing with COVID. Like he mentioned, I'm the payroll guy. My history is basically 25 years in the industry. I came from one of the big payroll companies and graduated over to Heartland about 5 years ago. We are very, very unique as far as culture is concerned because we're the only company in America where the entire organization, the whole sales force, not just myself, basically everyone here is 100% commission, and we get paid to make sure that our clients are happy long term. Unfortunately, if you look at every one of our competitors in the marketplace, it's basically just a one-time transaction. And I'll say it, man, our industry has gotten a really bad reputation the last few years with making a lot of promises and not delivering on that. So I just love the last 5 years, the transition that I've made, because when you deliver value to your clients long term and you're there for them a year, 2, 3, 4, 5 years from now, it's a complete game changer.
I also have David Montano. He's been in the lending industry for a while, but he's also helping out a lot with the collaborative networks. And I wanted to bring him in to help us kind of figure out what would be a good gaming plan for these businesses struggling currently with the COVID-19 crisis and everything's going on. David, he's not in the video with us today, but I wanted to introduce David real quick. You want to introduce yourself?
Yeah, David Montano. I'm a licensed broker here in California. I've been in the real estate industry, more so on the finance side of things, since 2004. So fortunate enough, went to the last crash and see a lot of similarities of how the markets are starting to crumble. My people call me when they get denied at their bank or they get denied at their traditional lender, and I'm able to provide a secondary option or alternative financing for them. And this could be for residential investments, commercial property, business working capital, equipment, accounts receivables, all the business financing that a normal bank would or could deny, and we usually just provide that secondary option. So I enjoy putting together a deal that just recently came denied for. You'd be surprised at the reasons why these banks are denying these loans, and I just like putting these deals together and providing an option for them when they didn't think it was, and being able to provide lending resources from across the country to be accessible to the local market. So
Thank you.
Glad to have you. Or glad to be here.
The question that I want Todd to address was, why should people outsource payroll? Now, as a previous experience, I was a banker at one of the big banks. One of the biggest things I've learned is the amount of work that it takes to be an entrepreneur. Often distractions can take away from the nature of the business or what they're good at. And if they can outsource as many things as possible, I always recommend that. Now, here's one thing that I wanted to bring up was on payroll, there's a lot of tasks that could potentially be outsourced, but not only that, could delegate some of the risk. But for that said, I wanted to see if maybe Todd can touch more bases on why people should outsource payroll.
Here's the deal. If you think about it, when you're a business owner and you're starting out, you have a lease on a building, or you have rent, you have internet, you have utilities, you have all these expenses. Here's the bottom line, folks. The IRS, and if you're in California, the EDD, the state of California, they have no grace. So if you mess up, you will pay a penalty, you will pay interest, and it won't go away until you fix it. So when you look at the expense of paying your employees through a payroll service, 100% of the time it's going to be a no-brainer, just based upon how much time you have to take out of your schedule to do payroll. QuickBooks and Intuit are one of the most popular options out there. Here's a national statistic. If you're doing your own payroll in-house, 1/3 of people get it correct every year and 2/3 don't. The average penalty in California is around $1,500 if you're a small business owner. $1,500 is about the expense to use a payroll company. So my point is this: the most important task that you have that has the most liability is payroll. Why would you want to mess around with that yourself? If you're late on your rent, if you're late on your mortgage payment for your building, if you're late on your utilities, there's always a grace period. There is no grace period with the government. It's the single most important thing a business owner can do, and it's the number one reason why people fail in their first 3 to 5 years of business. They mess around with their bookkeeping, they mess around with their payroll, and they don't survive. So here's a big deal, Edgar. Here's the big point, is most people that don't understand, hey, I'm paying cash, I have independent contractors that I know should be employees, they're listening to their friends that say it's way too expensive to get this right. And you know from your banking history, once somebody meets with me and they understand the small workers' comp costs most of the time that they're going to have, and the fact that they can actually sleep at night by paying an extra 12% in payroll expenses, and that's only on the first $7,000 of wages. It's not going to break them. They're not going to get sued. They're not going to go to jail, and they can actually sleep at night.
Now, one thing when it comes to, I guess, delegating, right? Aside payroll, one of the biggest benefits that I wanted to see if you can touch bases on was the actual human resource part of the payroll side of things, because that could be a little bit complicated for people to keep track as well. And it could be expensive hiring experts on the payroll, on the human resource side. I've learned something, a story that is very commonly used about employee handbook, one employee. My risk is not that big of a deal because I only have one person. But one thing I guess I learned from delegating risk is if you have one employee, that's enough risk. Even if you had 100 employees, mostly if you don't have the right infrastructure to be able to protect yourself, it could potentially come back and bite you back, basically. And especially right now with the fact that a lot of people being laid off. So I wanted to see if maybe you can touch more basis on that fact from the payroll side on what they should consider during these times of crisis.
Right, and it makes me think of a recent client that was referred to me from my credit card partner, because Heartland also takes care of, does a really good job on the credit card side. But here's the bottom line, true story. Auto repair shop in Pasadena. It was him, his wife, his mechanic, and his secretary on payroll. He didn't have employee handbooks. He didn't have any documentation because he didn't think he needed it. True story. Happened about last year I set him up. He was a Wells Fargo client, ironically, which went through the ADP acquisition, and he didn't want to deal with it, so he got a hold of me. Long story short, and the cool thing about this story is I just talked to him last week, and we funded his PPP loan. How happy do you think he is now that he's with Heartland, and we, through our relationship with Lendio, were able to get him funded? So I asked him last week, hey, I've told your story 100 times. I did say this, but I don't use his name, obviously. And I said, how much did it cost you to make your issue go away? Here's what happened. His secretary wrongfully filed a claim when she quit that he was sexually harassing her. His mechanic worked there. His wife worked there. There was no harassment going on. It cost him $150,000 in attorney fees to make it go bye-bye. I thought it was $70,000. I've been telling my clients for a year when I tell this story, it cost him 70 grand. I asked him last week, it was 150 grand. He admitted if he had the proper documentation, there's a good possibility that wouldn't have happened. Here's my point. Heartland, national payroll company, ranked #1 in America by a long shot. We do HR for a fraction of what Paycheck's, ADP, every competitor does it for, and ours actually works. Here's the biggest problem with the big guys. They assign you an HRG, an HR generalist. That HRG has a massive territory, and their phone's exploding, their email's full, and they don't have time to respond. One of these days, I'll get on here and show you guys because it's real simple. Heartland has access to about 30 licensed HR professionals every day. Right now, boom, call, pick up the phone. I need to fire somebody. I don't know what to do. Help. We'll send you the documentation, all the legal documentation, everything you need to cover your butt in the state of California or any state for that matter. Here's another bonus. If you're hearing this and you have employees in multiple states and you're using our competition, you're paying a multi-$1,000 HR fee every month for each state. Heartland does all states for one set fee, and it works. And Edgar, to your point real quick, you know what the average cost is if your small business client hires a full-time HR person? It's at least 80 grand a year. It's a game changer, man. When people meet with me, like I said, guys, I've been doing this for 25 years, and I don't try to switch people just to switch people. Here's the refreshing thing about Heartland is everyone in my company is 100% commission. We don't have a base salary like our industry pays. None of us, even if you're the top guy. You are 100% commission here. And that's our whole hierarchy. It's my manager, the VP above them, the VP above them. So Heartland, over 30 years, has created an entire culture of caring about the long-term satisfaction of the client. Everybody in our industry only cares about selling the client today and what can you do for me tomorrow. If I quit after 5 years and I no longer sell payroll with Heartland, they will continue to pay my residual on my entire book of business for the rest of my life. Over half of the residuals that we pay out on a monthly basis go to people that are no longer employed here. Edgar, if you call me a year from now and I'm still getting paid on your account, but I'm no longer working at Heartland, do you think I'm going to go out of my way to get your issue resolved?
Absolutely.
It's a no-brainer, guys, and it works.
So in this case, you mentioned the Lendio and PPP application, something that kind of, I think, like I said before, there's a lot more information out there on the PPP than there is actually money at this point, I think. But I know Heartland, you mentioned.
Let me touch on that real quick.
Yeah,
so here's the deal. Heartland is all about value. If you want to be able to send a link to your new hire, and all they do is respond in their smartphone and they fill out their W-4, their I-9. We have an automated solution that's included. We don't charge for it. And it's good for companies with only a couple employees. Our competition usually doesn't offer these types of tools unless you're a larger company. Here's another big deal. And this is all I would talk about if I had a chance. 1 in 3 California employees qualify for a work opportunity tax credit. 1 in 5 across the United States. Everybody, if they make it, and I hope they all do, is going to be rehiring after this COVID crisis is over. If 1 in 3 employees in California qualify for a WOTC tax credit, do the math. We are the only company out there, and I will confidently say this, that is successfully, inexpensively, 100% of the time successfully capturing tax credits for our clients. So if you're hiring, the minimum credit's $2,400, the maximum is $9,600 if you hire a qualified veteran or unemployed person or felon. That's a lot of money, people. This isn't a tax deduction, it's a tax credit. Secondly, Heartland formed an exclusive relationship with Lendio several years ago. We're able to provide lending solutions for our clients that others. What happened last week? Lendio, the nation's largest broker of loans, turned off traditional lending last week and only started focusing on PPP loans. So Heartland reps like myself that have been around for 25 years, I have business owners I've never met in other cities sending me all their personal information to my text because a banker that I don't know gave them my information. It's crazy right now. Of the loans that Heartland submitted last week, clients and non-clients, 50% of those got approved. I have had 1,000 conversations with Wells Fargo, B of A, US Bank, Citizens Business Bank, City National Bank customers, and I have heard maybe 5 success stories from 1,000 people. 50% of ours got covered. It's a big deal when you can deliver that value to people. I am helping non-clients get these loans, and they will stay in business because of Heartland.
It's exciting to hear that. And I mean, I think the biggest thing, if I guess a comment I can say was, if you mentioned these tax credits are for rehiring, the odds that they're going to rehire the same people, mostly because the business are probably not going to be the same after the COVID-19. There might be a lot of adaptation. Are these credits good for only people that get rehired, that got laid off, or do they get rehired and they're not the same staff? That's one question I want to maybe clarified.
Good question. They do need to be new employees. And the law is you only have 28 days from the employee's hire date to apply for the tax credit. I had a client yesterday. It was my first face-to-face appointment post-COVID. Well, during COVID, right? She's not very computer literate. We did social distancing. I did walk in my mask. It's a true story. And she just hired a veteran 2 months ago. She goes, how long do I have? Because her veteran would most likely be $9,600. And I go, sorry, you only have 28 days. And she's like, ah.
Man,
And this prospect I met through a banker that referred me to provide the loan. Yes, we did successfully fund her loan, and her company will probably stay afloat because of these funds.
Yeah, and so that case, basically, this is the first time in a very long time a lot of people are going to have to rehire and might have to rehire new talent because the business they're currently running might not be the same afterwards. So they might have to rehire IT guys to run their websites for example, restaurant, online delivery. And this is an opportunity to ensure that you take advantage of any help that's out there, especially when it comes to like tax credits and things like that. It's good to learn that.
I don't want to make it sound like Heartland's the only company in America doing this, but I will say this. We're the only company that I'm aware of that can capture it through the onboarding process that guarantees the credit, because you have to work 200 hours to get half the credit or 400 hours to get the entire credit. Heartland will refund the extremely small one-time fee per credit that we charge if the employee doesn't qualify, which means we guarantee the credit. When I was with my previous employer, I was part of the rollout of the WOTC program. I never signed one deal up, ever. Because two reasons. When the client saw the process, it was extremely complicated. And at the time, Paychecks took almost half of the credit as their fee. No one did it. Now it's simple, guaranteed, and it's dollar for dollar net tax in your pocket.
Questions that I did have was, and Todd, thanks for the wealth of information here. It kind of makes me as a business owner, like you said, sleep better at night, knowing that somebody else is taking the details away from you and having to, as a business owner, think about, making mistakes as far as your tax and payroll and whatnot. Are you, any mistakes that are made, does Heartland cover the obligation for that? Or how is there any guarantee for any mistakes made on your side? How do you guys cover that?
That's a very good question. So when you go with the big guys, and I'll put us in that category, the cool thing about Heartland, we are publicly traded. So we're bonded and insured. We have to subscribe to Sarbanes-Oxley. So when you're with a Paychex, an ADP, a Paylocity, a Heartland, you have a lot of extra levels of protection because God forbid if we do anything fraudulent, you have bonding and insurance that covers you. The big difference with the small payroll companies is they cannot provide that level of protection. If anybody wants to, Google Paycare in Riverside, California, and you'll see an experience that I was very close to where a small payroll company had over 400 clients that he wasn't making their tax deposits on. He was collecting the money, but it never went to the government. Unfortunately, you're still ultimately responsible for that. So the big deal with us is we're the power of attorney, which means we're taking the legal responsibility of the IRS and EDD or state payments on us. If there's a penalty, we must take care of it. I have one of my previous clients that reached out to me yesterday after 5 years of being gone. She's finally ready to switch. And her husband asked, what happens with everything we've done so far? Cool thing about Heartland, and I wouldn't have come here if this wasn't the case. Every client that we onboard, we audit their current payroll information back to the first of the year so that we can make sure it was done correctly. And that way Heartland's liable for that entire year. That's a game changer because other companies won't guarantee that. You have to make sure that we're responsible. If we're not responsible, why would you pay money to use us in the first place? So we take the legal responsibility from the small business owner and place it on our shoulders.
Any other questions?
No, thank you for that. And that's definitely reassuring and comforting knowing that there's a huge huge amount of information that you guys are protected upon these guys making mistakes on their own. So if you guys are willing to carry that weight for them, then yeah, definitely you're really sleeping good at night knowing that your payroll is in the right hands.
And I've always used this analogy. It's always made me laugh. Somebody's like, man, I'm paying $100 a payroll that sounds expensive. And the small business owner has a Porsche in the parking lot that's like a $1,500 lease payment. And he's got a Vente Starbucks that's $4.55 every day. And it's like, you're arguing with me about $200 a month. You spend that at Starbucks. The Starbucks police are not going to come after you if you don't get your Frappuccino, but the EDD and the IRS will knock on your door if you don't pay your taxes. Where's the
Absolutely.
value?
If I can add something to that. Oh, go ahead.
No, I was going to say payroll is usually the single smallest expense that a business owner has on a monthly basis, but it is the single most important bill they pay, period. I'll go to my grave with it.
I could attest to that, Todd. Coming from the finance side, seeing a lot of client applications and cleaning up the mess of their payroll, their past due payroll taxes. A lot of them have overdue payroll taxes just because they're so overwhelmed with their work that they just cannot concentrate and put the time into putting together their own payroll. And when mistakes are made, it either gets delayed out or it gets, sent in the wrong way. And next thing you know, you got a problem with the IRS or the state board. Is it state board of equalization, or is that who handles
sales tax? The EDD, the Employment Development Department, is the payroll side. And here's the funny thing you're saying, man. Can they get funding when they're in debt like that? No.
If they pay, not a lot of times, man. They get denied out, or they have to pay that back, and oftentimes they're screwed because they got to go back and hire somebody like you to come and help clean up the mess, or go get an attorney to clean up the mess. So it definitely is a problem with their funding. I see it all the time.
My business is 100% referral. When I was with my previous company, we built our reputation on CPAs, which have all pretty much followed me to Heartland. I would say confidently 50% of the people that come my way are in a bad situation. They have EDD notices. The IRS says if you don't use a payroll company, you will be shut down tomorrow. So I speak from experience of the nightmares that people are trying to do. I get it all the time, man. I was at Costco. I bought QuickBooks. My wife has nothing better to do. She's going to learn QuickBooks. 99% of the time, those people call me in 6 months and go, dude, I don't know what I did. Help me. CPAs don't recommend their clients use QuickBooks. What does that tell you?
Yeah, that's for the small solopreneur, I suppose. But even then, it gets out of hand. I was a solopreneur, still am, and managing my own is a task in its own, especially if you're dealing with outside contractors.
In 5 years now with Heartland, I probably have 300 clients in my portfolio that pay themselves once a month through their corporation.
I could see one of the biggest things, if anything, I wanted to add to your comment about the Ferrari or the Porsche parked in the parking structure, and you got these guys about complaining about service that they should be having in place. But I wanted to add, if anything, see if you have anything to say about this. I think if we reference, say, Robert Kiyosaki, you have the self-employed trying to become a business owner, right? A lot of the people,
baby.
So one of the biggest thing is building a system that is ready for the future. Even if you have one employee and it happens to be yourself, like that, you can grow into it. Often I think it's the fear that gets people stuck in such a place where I don't want to hire another employee if I can't even handle myself. Or if I have one employee and I can't deal with this on QuickBooks, it's going to take too much of my time. I'm going to have to hire somebody to help me do all this. When in reality, there's potential other services. I think that could potentially help them, like obviously payroll, CPAs or good bookkeepers and attorneys, corporate structuring, understanding the right proper structure. I always typically see that those were the three major things that got most business owners in a place where they didn't want to be, or had the ones that invested very little. And it seems like a lot, it might seem like a lot, but it was very little investment in the beginning. When they were growing, and they just grew because they have the confidence, they had the interdependence to depend on other people to help them grow. And they were not trying to become these independent individuals that were trying to run every single task of their business, and whatever made them really good at their business, they would say it was cooking tamales, whatever that case might be. They no longer have the ability to concentrate on that. I saw their business suffer. So seeing that, it's always been one of those things, is delegate as much of the task you don't want to do in your business to those that can do it for you better than you can, and potentially less than, or cost you less because of the time you're losing. So that's kind of the idea behind delegating, my personal opinion, of any business owner as much as you can, accounting for those costs that is going to be incurred into your business plan. So payroll being one of those, attorneys and CPAs being one of those. Ensure that you put that cost in your business plan. You forget to put it on there, and that's probably one of the most important part if you're going to have a successful business that can grow.
And let me add to that. I want to say this as a plug to you. You know, I met Edgar through a bank, and I think I met him early on in his career. And Edgar wasn't just a 8 to 5 guy that wanted to clock in and take orders. He literally cared deeply about his customers, and he saw a huge need. And I can speak from experience. Edgar's linked with a business coach that we've seen personally change tons of businesses' lives. I mean, flip them upside down and become successful from unsuccessful. And I've known this individual coach literally for about 30 years. There's a CPA that he and I are networked with that I've known for my whole career, 25 years. And here's the deal with Edgar. He's taken a lot of small Hispanic business owners that have been getting by for several years and linked them up with the right partners. They were uncomfortable. They didn't want to spend money. Nobody wants to spend money. I don't like to spend money. But he has seen every single one of these people that took his advice thrive. What does that tell you? Yes, you need to have the right things in place. Payroll is so inexpensive. A CPA is so inexpensive compared to, here's a quick analogy. I have a friend who's a esthetician, waxing and all that good stuff. And she left her previous employer and she's getting sued. And I just found out, I thought that the attorney that I referred, that Edgar's very aware of, very great attorney, I thought he was going to be able to get a couple grand and make it go away. She needs to settle. She has to write a check for $50,000 and hope it goes away. Hope it goes away, because she doesn't want to go to trial. I was shocked. She doesn't have 50 grand. Here's the point. If she had the right advice in the beginning, it may not have ever happened. That's the reason.
If anything, one of the biggest expenses for business owners, they always think it's inside of their cash flow engine. But I think, in my personal opinion, it's taxes. And then the second biggest expense is lawsuits or settlements. And if you could delegate or what?
Penalties. If you're a day late on your payroll taxes, you pay a penalty.
Or penalties. And if you're trying to increase your cash flow and become a successful business owner, you don't want those big holes in your bucket leaking out all this cash where all of a sudden you go out of business because you have a $50,000 settlement you have to deal with. Mm-hmm. And even if you have the don't have the cash, but you have the assets, they can go after those assets like that could destroy your business. Here's
the biggest difference, Edgar, is most small business owners are reactive. They react and hire an attorney when things go wrong. Let's look at a company like Amazon that's taking over the world, right? They're not slowing down right now. Do you think their shipments are up or down during COVID? Do you think they were prepared for this when it came? You betcha, because they're proactive. If you're a small business and you want to have a reputation like an Amazon, hire the right experts. It's not too expensive, trust me. And be reactive so you can build your employee handbook. That way you're protected the next time you have an issue with an employee, because it will happen. California is the most employee-friendly state in America, hands down. And trust me, guys, I haven't watched much TV lately, thank God, but I guarantee you, if you go turn on daytime TV right now, there's brand new, I haven't looked, but I'm guessing there's brand new, have you been laid off incorrectly because of COVID? I'll bet you there's ads already out there.
It's coming.
So if you're a small business owner that had to lay people off and you didn't dot your I's or cross your T's, which Heartland will do for you every time the correct way, you're susceptible to whatever the interpretation of the law is. Because in the state of California, as a business owner, you're basically guilty until you prove you're innocent.
Speaking of that, I don't want to go too much off the subject, but I know there's a new employee-friendly law out there that's going to cause a lot of mayhem. Unfortunately, I think this might put a lot of people out of business. The COVID put a big cover over that, but the whole 1099 not being an employee being a 1099
That's not going away.
confusion. That's not going to go
That all
away.
changed this year. I have a new client in Riverside who's had about 50 athletic trainers in high schools. Believe it or not, a lot of high schools, the athletic trainer isn't an employee of the school district. They're an independent contractor of my client. January 1st, all 50 of those people became employees.
Do you see any, not necessarily prosecution from the state yet, but do you see a lot of pressure being put, and still, even though with the COVID situation going on, or they kind of laid off the gas on that, but they're probably going to come back hard after everything?
Well, California is broke and they don't have a lot of resources, but here's the scary part. These are going to be extremely easy violations for them to go after. And when we're talking about the trucking industry and the barber industry and things like that, as soon as somebody gets in trouble and it's in the news, I think it's going to be a landslide and it's going to snowball. Have we seen that happen yet? I haven't. But the bottom line is get protected, because who wants that risk? It's not a lot of money. We've talked about it. It's very inexpensive to cover your butt if you're a small business.
David?
Yeah, I did. And speaking to a business that already, say they've had their payroll for, payroll company for, several years or so, what kind of transition and how does that, how long and what difficulty does that take to have somebody switch over to Heartland? Is that a big task for you on your side?
That's a really, really good question. I'm glad you asked. So a couple things real quick. Heartland always does a 3-year price guarantee. And the reason why we do that is our competitors don't honor that. They're constantly raising people's rates. I've seen things on invoices, guys, that didn't exist when I was with my previous employer. And I personally think they just throw them on there because people pay it and they don't realize it. We're extremely 100% transparent. And I'll get into the weeds a little bit. We have a 1-year chargeback period, which means every single sales rep at Heartland has to do the right thing for their client, because if they don't, people are going to leave. And unfortunately, the life expectancy of a client in our industry, other than Heartland, is extremely low. We make promises and always deliver on those promises, because if I don't, within 12 months, if my client terminates the service, they're going to take every single penny back from me. That's important to share. My competition, you only have to do 1 or 2 payrolls and you get full commission. So if you promise the world and don't deliver, who cares? I got paid. That's not our principle. Secondly, we're the only payroll company I'm aware of. I'm sure there's other ones out there that has a specialized implementation department. So if they're using one of our competitors and they have online access, all they have to do is provide that access, sign a waiver that they give us permission. We log in and retrieve all the data, direct deposit information. So most of our competitors make the client provide all that work, and it sucks. We do it on behalf of the client. And we can't forget this. We audit back to the first of the year. So we will guarantee you, Mr. ADP Paychecks client, Paylocity client, that we're responsible for the entire year of 2020, not just for where we picked up. It only takes 2 to 3 days for a small to medium-sized business to transition to our system. It is painless. Most payroll companies can't say that, and it's a fact, because most people that have been through a conversion have probably had a bad experience. We make sure it's a good one.
I like the fact that your commission is on the hook for that full year, and it kind of marries you to that client. Actually, it says a lot about your relationships that you guys develop over there, and you want to, obviously their success is your success, and you want to make sure that they're completely happy and satisfied. So that way, number one, you get your ongoing commission, but it just shows that personal relationship that is being built throughout those years. So one of the things that I've seen just recently with these paycheck protection loans is a lot of people, since they're all built off of payroll, a lot of people are unprepared, and that goes to show what kind of payroll company they have. So
all my clients have to do, and I tell them all this when I process their loan, I say, send me or your specialist or both, because we do assign a specialist. A lot of companies don't do that anymore. Excuse me. I say, send us an email, Please send me my PPP docs. We already know what those are. Boom. Within minutes, they have their documents from us. We make it simple because you know what? I mean, we all know this. Like I said, we had a call with the president of Lendio Tuesday morning of this week, and we found out a lot of the inside information as to how bad things were. The federal government released the money last week on the 3rd, I believe. And on the 2nd, the day before, they rewrote the whole loan application. The day before. All the banks can't do that. So Lendio shut down, reprogrammed their system, and immediately, I think they were one of the first companies to have the new app in their system. Like I said, 50% of their loans got funded. So the money's going to run out again in a few days. If you don't have all your stuff ready and you're not next in line, unfortunately, people are going to miss out on that money, and a lot of people need it.
Mm-hmm. Yeah, and it goes to say what you mentioned earlier in the conversation is business owners being reactive to the situation, and this wouldn't happen if this was, they had a well prepared payroll, right?
I told Edgar right before we did this, I had a lady call me through a CPA that said Todd might be able to help you with the PPP loan, and she broke down in tears. She owns a bar.
Oh, wow.
She's single.
Man.
She's not married, and she lost it. She says, "I'm so sorry. I just met you." I said, "Don't worry about it. I understand." She's probably in her 50s. She says, "I don't have anyone." Because I asked her, "Do you know what's required for the loan?" And she just lost it and said, I don't have resources. I don't know. And I was just like, I have to call her back when we're done. It is very refreshing in this time of need. And who knew that we would have this great relationship with Lendio prior to? Because you can't just turn these relationships on when the COVID hits. It is so rewarding. Our credo at Heartland is entrepreneurs respectfully inserted, serving entrepreneurs. What I explain to my clients is we actually get paid on net here. We have a 1-year chargeback period. We're all 100% commission, and that's our leadership too. So our entire culture is forced to make sure our clients stay on the service because we get a residual every month for the rest of our lives as long as you, Mr. Client, are happy. I have a vested interest in making sure you're happy. I did that before with my previous employer. I got a one-time commission. I still have clients that use that service I set up 20 years ago. That company is making money every single month on that account. At Heartland, I have a vested interest to make sure that account's happy for 20 years. It is a game changer. Our reputation speaks for itself.
To wrap it up, man, I'm going to ask you last question. Why not go to Lendio directly, then just go into Heartland? I think it's pretty obvious, but if you can wrap on that.
Well, people can. The good thing for me is it only takes me about 60 seconds for a non-client. And if they are a client, because of our awesome system we have called Atlas, it takes me half of a minute to submit a PPP request. It goes directly to Lendio. They're inundated, guys. I mean, I don't even want to know how many apps are getting per second right now. It's got to be out. Everyone's doing what I'm doing if you're with Heartland, which is helping people out. So I'm just submitting loans all day. Anyways, I don't know if there's a priority. I haven't heard, hey, if you're a Heartland client, you get moved to the front. I have no idea. What I do know is of the 50% we submitted as a company directly from the president of Lendio Tuesday morning, 50% of those got approved. Show me a B of A branch, a Wells Fargo branch, a US bank, and any bank branch that can tell you 50% of the people that walked through our door got funds. Doesn't exist.
Okay. David, do you want to, anything else before we wrap up? We have...
No. That was excellent information. It gives me a very good understanding of why to call you and why to use Heartland. So I appreciate you, Todd.
We make sure it's right, man. And we deliver on our promise. And it's refreshing in this day and age, unfortunately. And we'll talk about credit card later. But if you have any people watching this right now that use credit card processing, when I say it's the most shady industry I've ever seen, your head's probably nodding right now. The payroll industry, in my opinion, I've been in it for 25 years, is almost as bad because the big payroll companies incentivize bad behavior through their comp plan. I'll say it again. Large payroll companies incentivize bad behavior through their compensation plan. There's no other way to put it, but it's true.
To sum it up, I guess we can say most business owners, if you take any advice from now, be proactive, do not be reactive. Right now, there's a lot of opportunity to even the most disciplined individuals go out and start being reactive to the situations going on. But don't panic, start planning, survival, adapting. That would be my suggestion at this point.
And I'm happy to be a resource and have a conversation. Like I said, we never tell somebody you need to change the Heartland. We make sure it makes sense first, and then we partner. So I'm happy to be a resource.
Awesome.
The bottom line, the bottom line is create an extra line item on that profit and loss for payroll, right?
Dude, it's the smallest line item on there. It's cheaper than your Starbucks budget.
All right. Well,
yeah,
thank you guys.
If you want to sleep.
Oh yeah. So the Starbucks, that one doesn't let you sleep. At least the payroll line does let you sleep.
Yeah. Well, thanks guys. I really appreciate you guys reaching out. I know we've been trying to do this for a while. And excuse the casual dress attire. Edgar, you went up to me with your suit today, but you probably
I don't think David can see how I dressed up. It's been a while. I had to change the discipline. I want to make sure that I still stay on focus. So
I won't make you stand up. You're probably like one of those news anchors that's doing it in this short.
Yeah, I don't want to stand up.
Awesome. Thanks, guys.
All right, guys. You guys have a good day.